Hey, it's me. This is my I am a bear video, as I am currently a bear. Sorry about any background noise. I have Yanni playing and my adorable little 2-year-old nephew downstairs, so might hear him. Alright, so basically, I'm a bear right now. Why? Okay, taking a look at this, we have our head and shoulders formation that formed over the summer of 2010. And then we had an uptrend, of course. This red line here is our 50-day moving average. All right. And up, 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 up. And then recently we saw this, where I will zoom into the 3-month. Remember what this is? This pattern? This is a symmetrical triangle, which also is known as a coil, where a price consolidates and it can break out of either side. There's the probability is that's usually a continuation pattern, but in this case it wasn't. Okay, at the same time, what else do we have? This is our stochastic indicator at the bottom. Right there. That's a stochastic indicator. And we had a sell signal occur right here. And this area right here that I'm going to put a rectangle over, where there was a buy signal, that is a failure because it moved up and it should have naturally progressed from one side to the other. It was a failure because it gave a buy signal and shortly after gave a sell signal near the same level. Okay, so we have a sell signal in the stochastic. Relative strength index, actually, this shows nearly a head and shoulders pattern. Or you could even say that it is a descending triangle. See if I can draw it here. Descending triangle. Alright, give me a trend line. Well, anyway, you can see it there. It's kind of overblown, but descending triangle right there. And it broke down. When? The Thursday that the symmetrical triangle pattern broke out to the downside. Okay, so it broke out to the downside. How did it break out as far as the volume is concerned? Get rid of this. With volume, I will go to the ETF that tracks the S&P 500, also known as the SPY, or SPIDER. Volume. When it broke down, volume was extremely high. Alright? And then we had a low volume rally after it, a pullback, and a higher volume today to the downside. Okay? How do we get our price objectives now that we've established that we have a bear market going on, or at least a longer term correction? Alright. The vertical measurement of the pattern, multiply that by 2, and you have a line that you draw from the bottom of the breakout to find where you think it's going to go. So right now, you can do this breakout pattern right here, and this is a minimum price objective, bear in mind. My dinner's ready. That was my mom calling. And we have a price objective of 1260. All right, so 1260 minimum. Now we go to the Nasdaq, which I believe is going to be the weakest indice out of them all, as money moves from the more speculative stocks in the Nasdaq to the more safe, quote-unquote, stocks in the Dow Jones Industrial Average, which I believe is going to be stronger. Okay, we get a breakout on this day. Where is our target? 2600 minimum. Okay, so we still got plenty of room to go. Next one, Dow Jones Industrial Average, the DJI. See this pattern right here? This is much weaker compared to the patterns traced out in the S&P 500 and the patterns traced out in the Nasdaq. But we can do a measurement here, and our target is about 11,600. And does that correspond to a support level? It corresponds to a resistance level. Okay, so all feasible. Now remember, these are minimum targets, so it could certainly go lower. Next thing I wanted to go over, we could take a look at oil. I know it's recessed a little recently, but I still believe that's going to go up exponentially. We have our, I'll do a 3-year chart. Okay, take a look. There's one channel, which it's recently broken under, but still that's a little while in the distance. So here's our second trend line, right here. Alright. This trend line is going to be important in terms of the price of oil, and it's actually a somewhat of a channel. My trend lines are a little sloppy, but anyway. So right now I'm still bullish on oil. I expect it to get to about 200 per barrel within the next decade, and that's mostly because of I did an Elliott wave analysis. It was actually published in my school newspaper. The exact price I'm predicting is around 208.52 cents within the next decade, or perhaps even higher, $252. So right here we can say that, all right, it's going to go up from here, but just in case our technical analysis fails, we're going to keep a watch on this level right here. Okay, if it breaks through that trend line again, then say that we are once again bearish, because that's a significant trend line. It completely breaks the channel breakout, and that would actually be called a bull trap. Alright, I hope you learned something today. If you have any questions, please post in the comment box. Thanks for watching.